Hello dear friends, today is Friday, December 6th. Let's look at the charts for the euro and the pound sterling and try to make forecasts. As we can see, the euro extended gains despite some headwinds caused by disappointing data on German factory orders, French industrial production and Eurozone retail sales. As a result, the European currency returned to last week's high. Today, the price may reach a new peak, supported by strong statistics from the euro area. Likewise, the British pound continued its bullish run, having already surpassed last week's highs. The risky assets are in a bull market amid expectations that the Federal Reserve will lower interest rates at its upcoming meeting on December 17-18. After all, Fed Chairman Jerome Powell recently hinted that the regulator is ready for another rate cut despite potential inflationary risks following Donald Trump's presidential victory. Before we get into technical analysis, let's take a look at today's macroeconomic calendar. It includes German industrial production data, which is forecast to show an unexpected increase of 1% after a sharp decline of 2.5% in September. Downbeat figures could put some pressure on the euro. However, this report is unlikely to have a strong impact on the European currency in the current bullish market conditions, as problems in Germany's industrial sector are obvious to all. Traders may also take notice of euro area GDP growth data for the third quarter. The third estimate is expected to remain unchanged from the previous one, with the euro area economy growing by 0.4% in the third quarter after expanding by 0.2% in the second quarter. Compared to the same quarter last year, GDP is estimated to have increased by 0.9%. If the figures come in higher than analysts' forecast, the euro could see strong upside momentum ahead of the release of important US data. Today, the United States is set to release data on the unemployment rate, which is expected to rise to 4.2% from 4.1%. In October, furthermore, all eyes will be on U.S. non-farm payrolls data, which is likely to trigger increased market volatility. This report is expected to show 218,000 new jobs in November, a significant increase from October's 160,000 figure. In case of better-than-expected statistics, the greenback will resume gains. Disappointing numbers will reinforce expectations for another Fed rate cut in December and put further downward pressure on the dollar, thus allowing the euro and the British pound the extent to their gains. It is also worth paying attention to speeches by Fed officials, including Michelle Bowen, Austin Goolsbee, and the Mary Daly. Their comments on the upcoming statistics could shape the market's further direction. In addition to U.S. jobs data, market participants should take notice of the Universities of Michigan's readings on consumer sentiment, inflation expectations, and current conditions. Now let's move on to technical analysis. According to the 1-hour EUR USD chart, a decline followed by a false breakout at 1.0560 or 0535 will generate a strong buy signal, with the euro climbing to 0595. If the price breaks through and consolidates above this level, the euro-dollar pair could rise to 0625 and probably 0653. In case of weak US jobs data, the European currency will have a chance to advance to 1.0694, but this scenario is unlikely. At the level of 0653, I recommend going short on the rebound to catch an intraday correction of 25-30 pips. Short positions at 1.0595 and 0625 can only be considered on the false breakout. The target for bears will be 0560. If the price breaks through and fixes below this mark, the euro will slide to 1.0535 and even 0507. At this level, it would be wise to go long on a rebound in anticipation of a 25-30p move. In the event of a better-than-expected US jobs report, the euro could plunge to 1.0474 and get stuck in a sideways range for a long time to come, probably until the Fed's policy meeting. Speaking of the British pound, the same situation. A false breakout at 1.2740 will generate a buy signal driving sterling up to 27.67. If the price breaks through and consolidates above this level, the pound-dollar pair could rise to 1.2800 and 28.27. This scenario is possible in case of weak US jobs data. At the level of 28.27, traders are advised to go short on the rebound, expecting an intraday correction of 25-30 pips. Short positions at 28.00 and 27.67 can only be opened on a false breakout. In this case, bears will target 27.40. If the price breaks through and fixes below this mark, the British currency will likely dip to 27.14 and even 26.88, weighed down by upbeat statistics from the US. At the level of 26.88, I recommend going long on a rebound in anticipation of a 25-30 pip move. Going long at 27.14 and 27.40 will only be relevant in case of a false breakout. Best of luck, have a nice weekend.